Thank you very much for this kind introduction, and don't worry, I've got 10 minutes, and my job is just to highlight a couple of the changes that are going on in Japan. And, you know, when I'm asked what has changed, this is the most powerful chart in my opinion. This looks at Japan's elite. This looks at the top bureaucrats in Japan. How many of them quit the Ministry of Finance or METI or the Ministry of Health and Welfare in their 20s or in their 30s. And you see it was a flat line. There was no labor mobility. And over the last 6-7 years, this has shot up. And when you ask these people, where do they go? No, they do not go to Mitsubishi Corporation or JP Morgan. 3/4 of them go to startups, which just tells you that there's a young generation that is ambitious, that is anxious to create their own legacy, that wants responsibility, and literally is challenging the old consensus. The second thing that has changed, thank you, Japan is actually creating a new middle class. Over the last 7 years, consistently, the big part of net job creation is full-time employment. It's no longer part-time, which was part of the reason for the malaise over the last 30 years. Now it's full-time jobs that are being created, even during COVID. And with full-time job creation, what do you get? Not only higher incomes, typically incomes for full-time employees are about 30% higher, but most importantly, you get access to leverage. And you can see this in the data. You may be aware that an apartment price in Tokyo for the average apartment, which is about 700 square feet, right? The apartment price is actually back up to where it was, at the peak of the bubble economy. And if you look at the data, you actually find that 3/4 of the mortgage application that drive this positive fixed asset inflation in Japan, 3/4 of the mortgage applications are people in their 30s and late 20s. So it is this new generation of Japanese where purchasing power is being created. Affordability, because interest rates are so super low, you actually do find that the yellow line, affordability, is actually still relatively high, but there is a structural change which is relevant for monetary policy, because now 80% of the mortgages are floating rates, not fixed rates. A big change from the way Japan worked before. As a result of that, if mortgage rates were to go up by 100 basis points, wages would have to rise by about 12% in order to keep affordability stable. So that certainly is going to be a constraint on the Bank of Japan. What about corporations? And I'm sorry, there's a lot of data there. What's obviously interesting is that inflation and the currency is right around where it was at the peak of the bubble economy, but the 10-year bond yield is very different. Ownership, at the bottom part there, has also changed dramatically, with the mochiai, the cross-shareholdings, having unwound and effectively being bought by foreigners who now control about 1/3 of the market there. But look at the top line there. You see, when you look at EPS, that yes, thank you, Japan is now profitable. And yes, thank you, the return on equity has also risen, quite nicely. Now, when you look at the return on equity, as you know, in the United States, it's about still double of what it is in Japan. Why is that? It's because Japan does not have any superstars. If you look at the distribution from high to low, Japan is this rather boring bell curve, while America does have Mr. Otani playing here in America. Sorry, I'm German. I'm not very good with the baseball stuff. But I think I would have said Michael Jordan, but that gives away my own age there. Now, why does Japan not have superstars? It comes down to the industrial structure. Japan is a red ocean. You see here, the top 4 firms, on average in Japan, control less than 12% of their industry-wide revenues. While in the United States, you've got de facto more oligopolistic type conditions. And that's, of course, one reason for why the overall returns, right, are not very high in Japan. Having said this, I want to say something about the quality of management. And what you actually find is that the salaryman CEO, because the Japanese CEO is not coming from the outside, it's not a she, he comes from the inside, from within the corporation there. But you see is that sales over the last 30 years have actually been flat, while profits have risen 11 times. Now, anybody who's ever run a company, growing profits while sales are flat is incredibly difficult. So I always think that the salaryman CEO deserves the Nobel Prize for Applied Economics. You see that in contrast to S&P 500 companies, sales have risen 3 times, profits have risen 6 times, not bad, but in Japan, basically flat sales, sharp increase in corporate profitability. So they must have done something very right. The message here is that from an operational efficiency perspective, Japanese companies are actually very good, but you see here that the balance sheets are actually not very good. This is how corporate Japan distributes its spoils. And what you see is that, yes, recently, over the last decade, the shareholder return, which is dividends plus share buybacks, has actually risen very, very nicely, while sales and employee compensation have stayed flat. But of course, retained earnings have actually surged. And the bad part is that capital investment expenditure, Japan is actually underinvested in productive capital. This is very, very important. Now, when you look at the cash on the balance sheets, which is part of the microeconomic opportunity set here, you actually do find that, there's record numbers of cash that Japanese companies hold on the balance sheet. And by the way, I once showed this chart to Prime Minister Abe, God bless him, and he was frothing at the mouth and said, let's tax them, right? Anyway, you get the point. Lazy balance sheets, high operational efficiency that you have. Now, the interesting point is, and we hear from some of the best practitioners in activism, in engagement strategies in Japan, you are aware that the Tokyo Stock Exchange from April this year is starting to put explicit pressure on Japanese companies who trade below book. And this is starting to yield concrete results in the sense of that shareholder return strategies that are being announced are actually increasing quite smartly, and we hear more about this. One final point before I conclude, is that what is the ambition here? And this is a philosophical set, but certainly I find that in my 38 years in Japan, the generational change is absolutely key. The old Showa generation is going out, and the young generation wants to create a name for itself. The young generation also feels under enormous pressure because Japan's largest trade partners, China and the United States, both of them have become a little bit uncertain in terms of their predictability going forward. So the need for self-reliance, the need that if Japan doesn't get its act together on its own terms, right, that recognition, I think, is a very, very strong one. And the final point, Japan actually is a very strong meritocracy. If you look at the data, you see that, the intergenerational earnings elasticity. So do you have to come from rich parents in order to be rich? Japan is actually one of the best in the world in terms of actually offering opportunities here. So the message is very clear. You're dealing with a new Japan, not because of macroeconomic changes, but because of the generational change. Labor mobility is increasing, capital formation is increasing, and the young generation wants to create a legacy on its own terms. That's why I think it's the right time to actually engage with Japan. Thank you very much, and I'd like to invite to the stage Oki Matsumoto. Dozo, please come to the stage, who is going to lead the next section. Thank you very much.
Okay. はい。 I'm Oki Matsumoto. I started working for Salomon Brothers in 1987 and then moved to Goldman Sachs in 1990. I was there till 1998. After that, I created Monex Group in 1999 and been running that company for 24 years. I started my career in trading government bonds and the fixed income derivatives. And then in Goldman Sachs, I founded the Special Situations Group and then started buying bankruptcy debt. During my career, and then the Monex Group, we started offering the online brokerage service to our Japanese retail customers. During my career, always Japan's being kind of, when in 1980s, something happened in the world. They said, okay, let's have Japanese investor buy that stuff, like Brady bonds or whatever. Okay, and then in the late 90s, now there is some distressed situations in Japan, and then like a bank loan program and those kind of things, and then investors came to Japan to buy those distressed assets. So that's been kind of always the case, and then never that Japanese corporations are really the good target for the investment. But now, so the question is that always people talking that Japan is changing. I think finally Japan, as Jesper said, there's a very interesting situation in Japan right now, and Japan is finally changing. I've been in this business for 37 years. I've been always looking at this situation, and then finally I feel that Japan is really changing. The biggest factor now is the Japanese CEO is my generation. Okay, if you look at this chart, so I was born in 1963, and then during my students period, it was a golden age of Japan. Okay, it was a huge success of Japan. And then when I joined, when I started working, bubble was bursting, and after that, Japan's been always declining. So what happened is that when Japan was really doing great in the like up to after World War II to up to like 1990, Japan had a really huge success experience. So Japanese companies stick to their own management style, and then meanwhile there is a kind of how do you say the force who was forcing Japanese community or corporations to reallocate the resources was the METI, the government, or the mega banks. Those guys were forcing the corporations to reallocate resources, like merging to companies or stopping the business, blah blah blah. Those METI or banks were really forcing companies to reallocate resources. But what happened was, after this golden age, ended, the METI was taken out, and also the banks were taken out from this picture, and then we lost the governance. We lost someone who was forcing the Japanese corporations to reallocate resources, and meanwhile the management, they still stick to the old Japanese style. That was kind of from 1990s or 2000. And after that, the management started searching for new models, and in terms of governance, the Abe or those government started putting the corporate governance code or stewardship code and those kind of things, try to recreate some form of governance in Japan, but not really successful. But now my generation is now taking over the power in Japan, both in the private sector as well as the public sector, in all over the place. And my generation didn't have a success experience of Showa in Japan. So once since I started working, Japan's been always kind of declining. my seniors, they had a huge success experience in Japan. So when the world is changing, and then the Japanese corporations are told that you need to change, my seniors didn't want to change. They thought that, hey, we did so great after World War II. We are so successful. Why we need to change? Meanwhile, my generation been always thinking, well, we have to change. We are more open-minded to the global best practices or global standards. So we wanted to change, but there are seniors who are sticking to the old style. But now they are out. And then, my generation and younger, they're more open to change. And also, after the lack of the governance, after the lack of the METI or the banks doing the governance to reallocate the resources in Japanese corporations, now the real equity governance is coming to Japan. And also there are lots of pressures from all kinds of shareholders, not only institutional investors, but also retail investors in Japan. Now they are voting into shareholder meeting, and there are lots of pressures from those all kinds of shareholders. And also here comes TSE. Even TSE is now making, which Mr. Ao is going to talk about after me. But the TSE is introducing lots of new plans to force Japanese corporations to change. So there are lots of those pressures from many shareholders as well as TSE. And also, so while my generation becoming to get more power, there are still our seniors were kind of hanging around. Even my generation became the CEO of the companies. The seniors still stayed in the company as advisor or senior advisor and came to the office every day and stay in the same floor. Okay, so my generation still kind of how do you say, received some pressure from those old management. But the pandemic, the COVID pandemic actually put those senior people away from the office for 2 years, and then they didn't come back. Okay, so that created seriously, that created actually, we wanted to change, but there's still someone kind of, over, how do you say, caving, casting above us, but they are now gone. So that is actually a very good thing what happened to Japan. And as I said, there are lots of corporate governance reform, stewardship reform, TSE, many things, are being kind of created to try to change Japan. So it was kind of accumulated, all those kind of initiatives. But now, as I'm sorry, and then so there are lots of things being initiated in Japan. But the last now, this generational change of the management really making the big change in Japan. It's not, as Jesper said, we don't have superstars in Japan. Okay, so you don't see this change very vividly, but this is a very strong secular change. This is a big change, stable change. You can never rechange. Okay, this generational change is really strong. So I think Japan is finally really changing. Now, I'd like to introduce Mr. Ao, who is a senior managing director at the Tokyo Stock Exchange, and he is the main lead of this revitalizing plan of the TSE. So I'd like to ask Mr. Ao to make a presentation from Tokyo Stock Exchange point of view.
Hello. Thank you for your introduction. I am Katsumi Ao, Senior Executive Officer in charge of listing at Tokyo Stock Exchange. It is an honor to be speaking to all of you with Matsumoto-san, who has been a strong partner of TSE as a leader and valuable expert. He has contributed greatly to the development of the Japanese capital market, and I look forward to conversing with him. There are many things happening in Japan, and both domestic and foreign investors seem to share a positive outlook for Japanese market. There is no guarantee, of course, but these changes seem to continue. So it is an interesting time to be looking at Japan. Today, let me open our discussion with what we see in the market and talk about our initiatives, such as requests we made to listing companies at the end of March, which Matsumoto-san has contributed greatly. First, what we see. This year, we saw the topics and Nikkei 225 indices reaching the highest in 33 years. With changes in the Japanese economy, inbound demand is rising, business is coming back. Inflation pressure, BOJ's monetary policy, and weak Japanese yen are key factors too. Because of geopolitical situation, there is reallocation of Asia investment portfolio towards Japan. Also, with the Japanese individual tax saving account, NISA, expanding from next year, we believe Japan's retail investment flow will increase greatly, and the actual shift from saving to investment might happen. Under this circumstance, Japan has been pushing for revitalization of Japanese market, which will lead to expectation of listed companies' growth. Back in April 2022, TSE's cash liquidity equity market went through a major change. The new market segments, prime, standards, and growth started. We introduced this framework as a kickoff to motivate the companies towards growth and create an investable market that attracts investors, both domestic and foreign. Immediate after, in July 2022, we set up a council of market experts to follow up on the progress of the listing companies' responses. Matsumoto-san is a member of this council, and we greatly appreciate his contribution. As every month, we discuss the progress in the market and additional measure needed. Based on the discussion at the council, TSE published a roadmap of future initiatives in January. The roadmap focuses on 2 points. One is the end of the grace period for the continued listing criteria. This will end in March 2025 to further facilitate the effectiveness of the platform. However, this can only affect those companies that are not meeting the listing criteria. What is crucial is that all listed companies are incentivized to achieve the sustainable growth. This leads to the second point. Implement additionally framework to motivate listed companies' voluntary response towards growth. This is the request we made in March to the listed companies. The second point is, in response to the issue that we identified, which is the program of misalignment. Through discussion, it became clear that there was a misalignment of the perspective of investors and listed companies. For example, looking at PBR, approximately half of prime listed companies and trading below book. Compared by global index, 43% of the topic's 500 companies were trading below book, whereas for S&P 500, only 5%. And for European index stocks 600, only 24% were trading below book. This data suggests we need to take steps to bring substantive changes in the management's mindset and corporate culture, so shareholders and investors' perspective are more seriously considered in the management. This is the reason we decided to take the extra step, which is unusual for an exchange. The request in March calls for 3 steps to be taken by all prime and standard listed companies. Companies there that were trading above book or also requested to take these 3 steps. 1, analyze their current cost of capital at the board level. 2nd, formulate a plan for improvement. Then lastly, execute and update the plans through constructive engagement with investors. PBR is one of the examples we gave, but companies can use ROE, ROIC, and any other indicator that their shareholder use. Companies should choose whatever indicator appropriate for their sector and business. We are not requesting for measures that have immediate effect. Rather, listed companies should look forward-minded to long-term growth opportunities and boldly reallocate their capital to such investments. Share buybacks should be considered when compared with other growth opportunities. It is reasonable to return the capital to shareholders. Our request is not mandatory, but as you know, in Japanese culture, peer pressure and nudge are effective methods of discipline. 31% of the prime listed companies have already disclosed their initiatives or their intention to disclose. Looking more closely, we found that 45% of the companies with more than 100 billion Japanese yen market capital that are trading below books have done the disclosure. These findings were discussed at the most recent follow-up council on August 29th, but this is still at an early stage. We plan to the companies by following up on the company's responses and sharing investors' point of view and good example of listed companies' disclosure and nudge their responses. As a market operator, we provide the platform, but the main players are investors, such as yourself and companies. The key to unlocking the bold movement of the listed companies is the investors' engagement. Even investors' meeting agenda and sharing how you evaluate the company bring new insights and fresh perspective to companies. Do actively engage in constructive dialogue and give feedback to us and companies. Thank you for your attention.
Okay, thank you, Mr. Ao. So I'd like to take some questions from the audience, but before that, I'd like to make two questions to Mr. Ao. One is this PBR, this initiative. About 45% of the large companies reacted to this, and as you know, this was officially announced at the end of March. But this was kind of known to the market at the end of January. And you saw that there are lots of Japanese companies started doing more dividend payout or the buybacks. And then the market went up a lot. So Mr. Ao, with this the PBR initiatives, what kind of response have you gotten from issuers as well as investors or anybody? What kind of responses so far you've got?
Thank you for the question. For the listed company disclosure, though it is still an early stage, we see the current progress positively because our request is not just for companies to disclose, but to first seriously discuss the situation at the board level. So we expected it might take such time. 31% disclosure in the prime market in about 5 months from the request, especially among those with low PBR. This can be seen as a positive sign. For investors, both domestic and foreign, there is much expectation that is request will push forward reforms in the companies as management become more conscious of investors' perspective. The next step is how to actually bring about change in the companies. As said, there are companies who have not responded. There are actually those who have not responded because they are taking time to seriously working on fundamental change. However, there are also those companies who are too small to have the resource to tackle this issue yet. Or there is misunderstanding that those writing above book do not need to respond or managements have not been convinced of the need. So we will continue to follow up on the status of disclosure and feedback from investors and actively share those with companies. This will raise management's awareness of the need to act. Also, we make sure all companies know they are called to act. No one is kick off the hook. The third point is to summarize the key points and examples of good practices from the investor's viewpoint. So that will help the companies with less literacy and resource. We are committed to helping companies that are not fully prepared to respond to the needs of their investors, so you can enjoy a better and smoother communication.
Okay, thank you. And one more question from me is, I've been on the board of, I sat on the board of Tokyo Stock Exchange for 5 years, and I have been in the, several committee of Tokyo Stock Exchange for maybe like 25 years. But this time is really almost for the first time, TSE is taking a very, strong initiatives, like asking the listed companies to explain about capital efficiency and such. Why TSE is doing this time?
Thank you. Yes, I think with certain progress, may be slow for investor speeds, but gradually we see change, especially higher awareness of the importance of dialogue from the listed company's side. However, more change can be expected and effectiveness of the dialogue can be better between companies and investors. Basically, engagement is led by investors, and investors approach the companies purposefully. When approached, companies respond sincerely and with the necessary resource to engage. Of course, companies need to make effort to be investable, making sure the growth potential is appropriately valued by the market. That is the reason we will to keep providing necessary tools and skills to help the company understand investors' perspective and engagement. So when approached investors can enjoy fruitful engagement and understand the attractiveness of Japanese companies and the market more fully. As a market operator, we will keep doing what we can to maintain and improve their platform so that the market becomes more attractive for both of the main players, investors, and companies. Thank you.
I think Mr. was being too modest. You may know Andy Saito, the very famous CEO, once did CEO at the Tokyo Stock Exchange. He tried to change, but couldn't change. But this time, Mr. Ao is my generation. And this time, from my observation is, it's Mr. Ao and his team, it's a younger generation. And then naturally think, as I explained before, naturally think that we need to change. That's why this change is really happening. Now, I'd like to take any question from audience for Mr. Ao. Is there? Yes.
It's not a question. I just want to thank you for being with us when it's pre-dawn in Tokyo.
はい、明け方前にありがとうございます。This is a commitment. Okay, this is a huge commitment by TSE. Any other question? Yes, please.
Yes, thanks so much for the comments and the analysis. Ao-san, could you offer your thinking regarding the propensity of domestic institutional investors to highly value the efforts that you're putting in? We know Matsumoto-san, he comes to New York very frequently. We appreciate all the efforts that you and your team are doing, but there seems to be a bit of a disconnect between your strong efforts, perhaps in contrast to your predecessor, and the response on the part of domestic institutional investors' willingness or propensity to invest in equities, potentially more aggressive, especially considering that bonds have had a very difficult year. And as Ben Bernanke told us for many years, there's the portfolio rebalancing that naturally takes place where institutional investors would sell down their bonds, even just a little, and reallocate that money into equities. And even that hasn't really been happening. Thank you for your thoughts.
Hi, thank you for the question. My name is Ayla Wagatsuma. I'm from the corporate communications side at JPX, and I'll be talking as Mr. Ao talks. So again, I'm disappearing. So thank you for your question again. I think we do see the changes in domestic institutional investors side as well. As more interest comes from global foreign institutional investors, domestic investors too are seeing the potential of Japanese companies and Japanese capital markets. So we do see this positive change in the market. Another push will be from the government side as well. You may know that the government, Kishida, Prime Minister, have called out to the domestic institutional investors side to have more sophistication in their investment management style and et cetera, and their governance structure as well. So these government push as well will be pushing them more forward in terms of having a higher or more sophisticated outlook toward the Japanese capital market investment. So in that sense, we do hope and think that there will be coming more positive changes will be coming in that side as well.
And this may not be directly answering your question, but the Japanese institutional investors are changing as well. For example, last year in the summer, ISS Japan introduced a new rule. If the company owns cross-held shares, which value is more than 20% of the net asset, then ISS would say no for the representative to be re-elected. And then Nomura Asset Management adopted almost the same rule, internal rule, in autumn last year. And then Risona followed that thing too. And that provided a lot of pressure to the companies. And then this PBR thing came from TSE this year. So that really, provided pressure to many, Japanese companies to sell cross-held shares and then buy back their own shares. So Japanese institutional investors are changing as well, I think. I think I can take one more question for Mr. Ao. Yes.
Thank you for your time and comments. With regards to the PBR effort, I think there are two ways to have a better PBR evaluation for the whole market. One is for companies to expand their own multiple, right? The second would be for those low-valued companies to no longer be on the market, to be delisted. Is JPX taking any initiatives to encourage or ease the burden of delisting transactions such as MBOs, takeovers, buyouts, M&A, anything like that? Thank you.
Thank you for your question again. So in terms of, I guess, for one approach you've mentioned is making it delisting easier. We're not looking at that direction, but we do see more activity in terms of more MBOs and TOBs actually happening in the market. In terms of the delisting numbers, it has increased actually compared to a few years ago where corporate action related delisting was about 30, 40 companies a year. Now it has actually turned out to be about 80 that happened last year. So we do see more activity in terms of companies voluntarily taking those initiatives. For the TOBs and MBOs, actually MEDI has put together a guideline, maybe you know this, but having a more easier or a clearer directions or guidelines in terms of when companies are approached for their mergers and acquisitions approach from other companies, how the board should be thinking. So they put together a guideline in terms of those setting a clearer sort of outlook and perspective, what kind of perspective board of directors should be having for those companies approached. So all those initiatives are coming together at this point, making the companies voluntarily initiative make easier. So we yes, we expect more activities in terms of that. Maybe more companies will be thinking about delisting, and including delisting. What is the right sort of approach for them to have the right allocation of the capital in terms of like response to our request?
I think that may be the one very important agenda for that council to follow up going forward, which I sit on that council too. Okay, it's now becoming finally 6 a.m. for Mr. Ao-san. So thank you very much, Mr. Ao.
Thank you. Goodbye.